Good day, everyone. Well, as we can see on the major averages, we've had a pullback of sorts and an accumulation of distribution days in the Nasdaq. We've had, of course, leading stocks struggling to move forth, and that's, of course, been the nature of trading this year. That's been bolstered by quantitative easing that nudges the averages higher, and then when they sell off, they find their footing relatively quickly. In fact, every correction in the Nasdaq this year has been contained to within 5%. So that shows you how strong the uptrend has been, but also how difficult it has been to profit on a normal basis by buying and pyramiding leading names, and also in terms of trend following the market. As I pointed out many times, trend following wizards with 20-plus year track records running investment funds are collectively down this year, despite the averages being up a very solid double-digit percentage gain. I don't think I've ever seen that kind of dichotomy in the history of this group. And again, it just goes to show that a trend, as they say, a trend is your friend until it bends. And unfortunately, in this market, we've seen a lot of bends that are just enough to get people out of the markets and timing models to go to cash or to sell signals. And my timing model's been on a buy signal for a number of weeks, and once again, unless we start to really see a concerted sell-off, it's probably going to stay on its buy signal. It's well aware that quantitative easing is rumored to taper, that the Fed would step in and taper before the end of the year, but of course we've heard all these rumors time and time again this year, and nevertheless they never come true, and the markets then find their footing and go higher. You might all remember December of last year, there was all this worry talk about the Fed slowing up quantitative easing, and when that didn't happen, then we had a huge gap up on the first trading day of the year. And right now, given what Bernanke has said, and other Fed officials have made mention, that not only do they want to see an unemployment rate of 6.5%, they want to see it better than. So they've switched their language from 6.5 to better than 6.5, which puts tapering off even further. And then when you factor in shadow statistics of what the real unemployment rate is, when you factor in those who have just given up looking for work altogether, we're still north of 10% unemployment. So I wouldn't be surprised to see this tapering, any significant tapering, that is to differentiate significant tapering from ceremonial tapering, because the Fed is still a political body and they need to make people happy. I don't think we're going to see any significant tapering, and possibly until it could be end of next year. Gil?
Yeah, I'd have to agree with you there, Dr. K, that I don't really see how the Fed ends tapering. There was news recently that the interest on the debt was estimated by the Obama administration to come in at like $250 billion, and it's actually been over $550 billion. So if the Fed were to start tapering aggressively, say, then that's going to have the effect of driving down interest rates. And we've seen already bonds have been in a downtrend and trying to find a low in here, I guess, as they back and fill in this area on the TLT. But if that happens, if they start tapering aggressively, and interest rates are going to spike, and then that creates a conundrum, to steal a phrase from Alan Greenspan, that you get the higher interest rates, so the interest on the debt's going to shoot through the roof, and the U.S. is already running over $17 trillion in debt, and we have to continually finance that, so they're not going to get out of having to issue more bonds down the line. So it looks.
UK's got the same problem. I think it's Money Week, or one of their big publications here, did this whole vignette on how deeply in debt and bankrupt the UK is, and how there's really, in their view, there's really no way out except to keep buying time by printing more currency. And the U.S., I mean, we're at 17 trillion, but if you factor in Social Security and Medicare and all those other programs, we're anywhere between 55 to 75 trillion in debt.
Yeah. So, how do they do it? And of course, the rumors of that are what have driven the market down over the last couple of days. And Nasdaq finding support at the 4,000 level. So, there's actually, my short of the day was Lulu, which I actually came in short the stock overnight. It just looked to me like this thing was ready to blow. And a lot of times, if you go back you go back and look at the book I wrote with Bill O'Neill, and it shows the weekly charts. This is what they look like, and you think that, oh, I could have shorted it here, and it was a nice even break to the downside when it failed. But a lot of times, that break down the right side of the head and shoulders. This is actually this thing's been going back since September of 2012. This long head, big ugly head and shoulders. There's the head, and it's like a head and shoulders complex. And what you see here is, the break here looks like it's a continuous break to the downside. But usually how these things end up breaking down is on a big gap move. And that's what brings up the shortable gap. We thought back here that was a shortable gap, but you would have been stopped out pretty quick here. This one looks like it is. And I actually covered my position around 61 this morning, which virtually guarantees that it's going to go down another 2 points before it starts to bounce. Of course, what it'll do is it'll go down to like 59, and it'll suck me back in because I'll sit there going, oh God, why did I cover my position? I should have stayed short. And that's exactly the point where it'll bounce. So I think, if you're in it today earlier, because you did have a rally above 64, which gets you close, what you really have is a little head and shoulders here that's part of the right shoulder complex, I love that term, on this big head and shoulders here. And so here's the little neckline here, and so if you draw a line across the lows here, let me get out my little handy-dandy pencil. I don't know, I guess you draw it there. You kind of rallied earlier today towards the neckline, but you didn't really get there. To me, it's like 65, 66. I suppose you could draw it, I don't know, maybe a little, try to get it lower just to make it fit, what's going on. So it's closer to 65 here if I draw it. If I wiggle it a little more, maybe it's another point up or down. But the bottom line is that rallies from here, you probably undercut. I would look for an undercut of this low possibly, and then you get into the neckline of this bigger head and shoulders type thing, which, let's get that out of the way, which I guess you could draw like that. So maybe you're headed to 56, 57 on the downside. So, but that's, this is how these things usually get going to the downside and the stock's top. They hired a new CEO who said something really stupid, something about how fat their customers are and how they're all fat people. I mean, the best way to grow your business, of course, is to insult your customers. You guys know I like to do that one all the time, especially if you're in the chat room. But I think in this case, not too bright, and I think the guy doesn't really have the same touch that the prior CEO did, and so I don't think that Lulu is things are looking good for Lulu right now, and I think this stock is probably headed lower. But I'm praying for a bounce back up into this level somewhere in here. And basically, the highs of today would be nice. I might put it out again, but a lot of times a bird in the hand is worth two in the bush, especially in this market, and I think that's really the situation here. Another one that I'm looking at short, I think Cree, we talked about this in the chat room actually, and somebody came up with the term Hydra here, two-headed. You got it. This is, I've never seen this pattern before. Have you, Dr. K? A pattern where you have two massive breaks off the yeah, it's like a Hydra and shoulders formation. So you have this two heads. Here's a left shoulder here. Here's a big head. Makes a little right shoulder, and then bops up again, and that creates a second head. And now here you are creating the second shoulder. Now my view is the stock's a short in here, particularly on any rallies back up into, say, the 10-day moving average, which I think you could have. If you undercut these little lows here, you come down for a couple of days, you might bounce back up. But I would keep this in mind as a thematic short, because I don't, lead lighting, yeah, it's great. I've got LED Christmas lights up, and what I love about LED Christmas lights is that you can string together 85 of these 25-foot things. So, Dr. K, the tree out front, I went nuts with a ladder. I almost rented a cherry picker, but I went nuts with a ladder on the tree out front and completely wrapped the thing in lights. It looks great.
Excellent. You blocked us. The neighbors get into the Christmas spirit pretty well. So,
I love it. Hanukkah.
Yeah, in London, of course, it's they start celebrating Christmas in they start not celebrating. They start it in July. They actually kick it off at Harrods department store, and they dedicate a massive showroom to a winter wonderland. Which is kind of odd. It's a bit surreal in July.
I bet. In any case, LED lighting is a wonderful thing for those of you that like to go nuts with Christmas lights, because you can string. In the old days, the old incandescent bulbs, if you string together 4 of them together, you blow out a fuse somewhere. And with these, you can string together 85, and it doesn't matter. And they're using very little electricity, and that's a great thing, you know. But the bottom line is that LED lighting, GTE, Sylvania is coming into this market. So are some of the bigger players. It's going to be a low margin business. Yeah, I don't care how you slice it. It may be LED lighting, but it's light bulbs, you know, and light bulbs, like most things, if they can be created by a number of producers of these things, and big ones with economies of scale, I think the margins are pretty thin, and that's probably why Cree is looking like trouble. So, you know,
I
of
did
course,
want to mention, you asked about the pattern, and you know, when you have a gap down in a stock, the reason I avoid the stock for a number of months after is because there's been a number of cases where, as they say, the other shoe drops. And usually the other shoe drops before the stocks had a chance to hit new highs. But nevertheless, your odds are greater that there's going to be a subsequent gap down in the pattern. Yeah. And you know, of course, this makes the Cree very ripe for shorting at the right point.
Yeah, I don't have a relative strength line on this chart, but it's making the relative strength line is making a lower low, and it's lower than where the relative strength line was back here, I think. But all I know is it's making a lower low, and usually if I see something holding up in a head and shoulders, one of the first clues that it's probably ready to break is that the relative strength will start to look pretty ugly relative to where it's been, and in the process of making new, you know, lower lows. And so Lulu was the same thing. I think it had a 32 relative strength, and you're starting to see the breakdown in you know, in the line to new lows. And notice here on Cree, you have the 10-week moving average just starting to cross over the 40-week moving average. So this thing's starting to look a little bit pretty ripe on the short side. So Cree is one of my targets here based on the pattern, and so is Lulu. And of course, I'm out of Lulu now. I did short a little bit of Cree this morning, but I covered it because it came down pretty hard and it undercut this little low. So I just want to see how it acts in here. I'm thinking it might have a little bounce in here, but I think it's all going to depend on the market. And you can see the market's pretty volatile, to say the least. Stocks have been up and down today. You know, I think it all centers around the NASDAQ finding support at the 4,000 level. And if it breaks that support, then you might be headed to the 50-day moving average. But I've been thinking maybe you could have some big old sell-off that takes you down over the next couple of days, maybe. And that's going to depend on how today closes, I think. And then what happens is next week the Fed does nothing, because we're thinking they can't. And so there's going to be a lot of speculation, kind of like you had, I believe. Was that back in October? Dr. K, when was the last time there was a lot of speculation about a tapering? Wasn't it October? And so you started to see the market sell off in advance, and then when the news
and that created that sell-off. Well, pretty minor still.
Yeah, so
but,
I mean,
always rumors.
The bottom line is just watch how the market's trading. I take a short-term view. I think everybody knows that. I'm not position trading. I'm coming in and trying to hit things and hit them fast, and the faster the better. I mean, this week's stock of the week was Twitter, and kind of saw this thing coming out of the old U-turn. It's hanging in pretty tight, so maybe it's going to sit there tight. I'd watch it for the next few days. Maybe the 10-day gets a chance to catch up. Facebook today, I think this is a short myself, and I've got a little position out here. If I get stopped out, I get stopped out. But it's being added to the S&P 100 and the S&P 500. I thought it was just the 100. So you're right on that, Dr. K. It was both of those. But, you know, how many index funds are going to be buying this suddenly? And I think you get a lot of kind of dumb money coming in and buying the thing. And it's going to pull back in. So I'm just kind of watching. The thing to watch here is, let's see if I've got one around. Yeah, let's see. Put FB in here. Let's come on now. It's basically holding in here. These are the highs of yesterday after hours, and I'm just watching the volume here. I'm not heavy in it, but I got a position out in it. I actually shorted it yesterday after hours. It was trading up to like 51.60, and we'll see where this goes. I think if the market weakens, this thing's going to roll back. So another one I'm looking at right here too is LinkedIn. I'm watching it. It did bounce off the 50-day earlier. but I'm watching how this bounce occurs and using my 620 chart in case, it looks like it's trying to hold up there okay, but I think it might roll over, so I'm kind of watching this. It might be later in the day. I mean, yesterday the market sold off hard in the early part of the day and then bounced back. It looked like it was going to turn and rally, and then after that it gave way and closed at the lows of the day on heavier volume. So I think it's just everything's kind of fluid right now. Usually what I notice is if you get short quick in the morning and things start to break for you, I'll have profits in hand, and what I'll do is I'll cut my positions back, in half from the initial ones I took, which are usually pretty heavy, and then try to hang out, give myself a little room, and see how things pan out. And that kind of worked yesterday too, because the market broke hard, take some profits on the short side, and then see if things bounce, and that's what you got midday, and then that actually became shortable again later on in the day as the market gave way. So we'll see what happens today, but shorting is for the nimble if you're going to do it. And I know somebody's asking a question, how long do the index funds usually take to buy a position in a new addition to the S&P 500? 2.97832 days based on the most current studies. I have no freaking idea. Do you, Dr. Cat? It takes, I just watch the volume on an intraday basis. That's what I'm doing here. So, put a little bit out.
Quickly. Usually done, I think, on the first day.
Yeah, so I don't see how exactly when someone's going to blow a whistle and say we're done, start shorting the stock. For all you know, it doesn't go down. It's not doing it right now. It's trying to break out intraday, so it's hanging in there. But we'll see how this pans out once it's all over with. Especially if the market rolls back in, which I think the jury's still out on that one. So let me go through some other questions. Somebody says, are you guys coming to the New York City Traders Expo in February? I think we did that once. All I remember, it was freezing, and I don't understand why anybody lives in any place in the world that gets that cold. So no, we're not going back. The other thing is we don't find that we find that we end up bringing our base to Traders Expo. We don't really get introduced to anybody new, so we don't see it as all that advantageous. And traveling takes us away from our trading, and we kind of gave up on all that stuff earlier this year, and it's allowed me to focus more on what I do, which is trade. And I make my money trading the markets, and getting away from that focus, I think, has not been helpful. And so, on top of that, I dumped going on Fox because they want me on at the opening. And as far as I'm concerned, it just gets in the way of what I really do, which is trade. And I make more money doing that than anything else these days, and I don't see any reason why I need to travel to New York or even be doing anything during market hours, unless I choose to take the day off. So all that is to say, that's a long-winded way of saying, no, we're not going to the New York City Traders Expo. Can you explain the post-IPO quiet period you mentioned with Twitter? No, I actually mentioned it with GoGo. GoGo, that expires on the 17th, which is next week. So I'm thinking, you don't want to be in the stock here. This thing had its move, and it had a couple of them, and if you're able to catch two of them, that's great. And in this market, that's usually all you get. You have something moves very quickly in rapid fashion for a couple, 3 days, and then boom, boom, that's it. That's why I think the Twitter, you can sell it now and take your profits and hang out and wait for the next buy point. If you had a breakdown into 48 on a sharp pullback, which I think is possible, that's probably where I look at it as being viable right now. But I think with GoGo, you have that there's supposedly almost 74 million shares outstanding that could be sold. But I remember back in, I don't know, when was the stock day? 2003. Do you remember Arench, the guy?
Sure.
I remember Arench. Yeah, he was a big hedge fund man. He had a $300 million hedge fund. And he was telling me that everybody's shorting Krispy Kreme in 2003. It was like April, and there was some lockup coming out on the stock, and everybody was shorting the stock in anticipation of the lockup. And once the lockup occurred, the stock turned around. This is 2003, and it jacked, and it basically doubled in about 1, 2, 3, 4. Well, Well, it didn't really double. It went up well over 50% in like 5 weeks. So don't make any assumptions about what's going to happen to a stock once lockup comes up. But my guess is, based on the fact that the stock has already had a huge run, then I think you're probably going to see some selling, and I would just wait and watch on GoGo. But on Twitter, you still got a long time on the lockup period, but Twitter, the thing I think what you're mentioning, the quiet period, is when last week analysts were able to comment on it and the underwriters were able to comment on the stock. I think that's what you're talking about here. Yeah, that's right. I'm sorry. In any case, the analysts can now comment on the stock after so many days, and they'll go out and put their ratings on the stock. What I thought was interesting was that the ratings on Twitter were pretty neutral. Some people had a $36 price target, some had a $50 price target, some a $40 price tag. So in other words, there wasn't all this ebullience regarding the stock, and so I thought that was constructive in that everybody wasn't really getting carried away with it. So that's what I was basically referring to. Somebody says the 55 to 75 trillion is a very conservative estimate of unfunded liabilities. Yeah, that's absolutely true. The U.S. government, they use cash accounting, which if you run a business, anybody who runs a business, you know that you're not allowed to use cash accounting. That's considered fraudulent. You have to use accrual accounting. So if you have liabilities or expenses coming up in X number of years, that has to be accrued somewhere on your balance sheet. And the U.S. government doesn't do that. They operate on a cash basis. That's why what they actually did in 1999, when they supposedly balanced the budget, they were using it on the back of Social Security tax receipts. So on a cash basis, they balanced the budget that year, but not on an accrual basis. On an accrual basis, which is real accounting, and which the government requires public companies as well as other companies to abide by, interestingly, the U.S. runs about a $5-6 trillion deficit every year. So on that basis, so that just gives some idea how mad all this is. And as Dr. K and I have been saying, it probably keeps the U.S. government or the Fed from really tapering. So, so I'm looking. My approach here has been to be short recently, and that's worked. But there's the occasional long, like the Twitter, or a few weeks ago the GoGo. And a few weeks before that, Solar City, and I come in with a big position and run it and make some money quick and then back off. And now I'm looking at the last few days the short side, because the advanced decline line on the index is actually had topped out in late November. So if anybody looks at that, I wonder if I can pull something like that up. Here we go. Oh, sorry, everybody, but you can't know my password. Let me bring this up real quick. Here's got a chart. Let's go. I'm going to pull up the. I think it's NAD. There we go. And that's got to be turned into a cumulative chart down here. Cumulative. I use stock charts, so does Dr. K. We have a subscription, but you can look at the AD line. Yeah, click this. This is pretty. Too many. I'm going to get rid of all the noise here. I got all these moving averages here. Dr. K, you put some of these on here, didn't you? 17, 10. Yeah. Those are all Dr. K's secret moving averages. But anyways, we don't have to worry about that. That's a relative strength line in the middle of that gray thing. But you can see that breadth actually topped out in late November, and it's been going downhill even as the indexes have been going higher. So same thing if you go to the NYAD. And also the number of new highs, you can see that's actually the New York Advanced Decline is making a lower low here, and it's been in a downtrend. It actually topped out in late October. Okay, so you've got some cross currents here that I think are underlying clues as to the market's weakness, and so that's why I haven't been afraid to go pick on a short here and there and try to make some money that way as well. And there have been some that have worked pretty well, but it's not like a big party yet. A nice flash crash would help that. I wouldn't mind that. So given that I am slightly short right now. But in any case, you can see that the breakdowns here have been, it's been building, and there have been other clues, and you've seen it, like Dr. K says, the leading stocks are not, they're not making even progress. It's uneven action among them all. And it's just kind of choppy and difficult to get things going on the long side. And so you get a sense of the market's ready to pull back. But again, you know, every time the market has pulled back, there have been clues like this, and then the market pulls back. What did you say, Dr. K? No more than, say, 5%, maybe 7%, I think, on the NASDAQ we had earlier this year. There was one.
Well, it's 5.5. 5.5 was the biggest pullback.
Okay,
So it's basically contained within 5.
Yeah, so, you know, maybe that's what you have here. How far are you off the indexes right now, Dr. K?
Just over 1%.
Yeah, so you could go down another 4%, you know, and if you're short that in the right stocks, that could be a glorious thing, you know. So I'm open to that. I'm neither a bull nor a bear at any given point in time. I am moving with the flow, you know. Like I was joking, you kind of have to understand what frequency the market is operating on, because it's a weird frequency these days, and it's just designed to throw you off. And that's what it does. Watching the market come in, and NASDAQ's rolling in now. You're up 1. You were up like 6 or 7 or 8, I think, at the peak earlier today. Let's look at I want to look at this. Let's go to the NASDAQ CompQX. Well, do the Qs. You can see the breakdown in the 5-minute chart on the NASDAQ. So you're going lower. You know, I mean, you get a little bounce here, so I may be getting busy here to put out more shorts. As this breaks down again. Just taking a look here real quick. Yeah, I see LinkedIn starting to turn red. In any case, this is what you see going on right now. So now you're starting to break down again. And I think you're probably headed lower. But you could come down 4%, make some money on the short side, whack a couple stocks, and then see if we bounce. My thinking is, like we're saying, you might come down hard, and then next week the Fed does nothing, and that triggers a rally into year-end. Dr. K, I wanted to run something by you because I had read a study, is actually by the Hulbert Digest, I guess, and what he found is that December, the idea that December is some sort of big rally month for the market is not true. In fact, 8 other months during the year outperformed December. But the period that is the real Santa Claus rally is the final 5 days of the year and the first 2 days of the next year, the new year.
Yeah, that's been true for. That's held true for quite some time. I mean, if you go back to like 1921, and you've got you're looking at December's. December tends to be the first and foremost leading month, I believe. It's a very long-term study. But if you look at more recently, how far does Hulbert go back?
Like, I don't know, it's 80 years or something like that.
80 years, so that would be then 1943. Yeah, I think it's conditional on how far back you go, because I know there was a study done quite some time ago, and this was in the 90s, and they went all the way back to, I think, the turn of the century, and they had a really good, well, December was the best performing month, or the second best performing month. But of course, we know that the last 13 years have been quite different, and obviously that would upset the averages, or that would upset the monthly performance. So given what Hulbert found, and I believe that to be correct, certainly within, let's say, the last 50 years, you don't want to bank on December being a bullish month necessarily. Again, you have to always look at the price volume of leading stocks and major averages to determine what to do. And I've never used these seasonal indicators to make money in the market when it comes to the worst performing month, or the best performing month, or the scariest month being October, or I guess September's been one of the worst performing months. But again, just because I think September was the weakest performer in something like 60% of the cases, but that means it's not the weakest in 40%. So you really can't be using these seasonal statistics as a guide to your trading. And in fact, they can foul you up, because they might cause you to sell a position prematurely just because you're in a weak month.
Right, and you notice how they say September, October is the weakest period for the market. And look at this year. If you invested at the beginning of September, on September 1st, and you sold out on October 31st, rather, at the end of the month, whenever, you would have bid up pretty nicely there. Nearly 10% it looks like, and so you can't really abide by all of this stuff. So anything could happen. I think you just move with the market, and that's what I'm doing. That's been my approach. I have a new saying, which is bulls make money, bears make money, but deer in headlights get slaughtered, and that's kind of how this market is. Somebody's asking a question. Let's go to some questions here now that we've babbled for half an hour ourselves. But let me just get this. Get my charts squared away again. Somebody says gold has been, Dr. K, gold has been in a long-term downtrend. You notice that gold is gapped down today. It gapped up 3 days ago. And this seems, that's the whole QE tapering thing. But Dr. K, do you have any comments on gold? Do you think that the breakdown in gold, the breakdown in commodities, PVC, which has been in a downtrend as well, indicates deflation?
No, I don't know. There's a lot of cross currents with gold, and when it does these little wiggles, gap up, gap down, they're mini gaps, and it does that an awful lot in the pattern. So I wouldn't read much into those day-to-day movements unless they're really pronounced or coming out of a good basing formation like we've seen gold do a number of times this last decade. But the bigger picture of gold in a correction, quite a substantial one, and silver, both being in the biggest corrections they've had in basically 12 years. And if you look at the Commodity Research Bureau, yeah, it's in a little uptrend, but again, it's just noise in the pattern. The overall pattern is that it seems to be still in a downtrend. So I think that's a reflection of a lot of these countries that are still mired in recession. There's a lot of statistics that are reported by government here in the UK that are pretty false, outright false, or designed completely to mislead the public into thinking that things are all well or at least healing. And I would argue that things are actually still pretty tumorific. And same in the U.S. A lot of those statistics are painted. And if this happens in the U.S. and UK, Europe is no different. These governments are no different in how they produce these statistics. So buyer beware.
SunPower, somebody mentions, this is a third attempt in past 5 weeks where SPWR traded sharply lower to the 28 level and then reversed and finished positive. Would you consider this constructive action? Hell no. I mean, that pattern doesn't look good to me, and so it finds support here. Eventually, it's just going to bounce and break. So does that mean you buy it here? No. I think solars look like they're in trouble to me. I was shorting First Solar a few days ago, and it rolled in for a couple days, bounced off got down below the 50-day and bounced off the 65-day exponential. So, I don't see solars. Solars, to me, the interesting thing, market going higher the last few days, solars lagging. To me, that was a clue. And in that case, I am shorting these stocks on bounces rather than trying to buy them. So, hold on a second here, everybody. I've got a trigger here. Let's see, more questions. Vips, thank you. Not sure why. If that was a pocket pivot yesterday and holding. But you know what? We report pocket pivots and Bible gap ups as technical facts, okay? I know yesterday somebody was asking me whether, is Triple D a buy on the pullback, and I guess, if you look at it, you had a pocket pivot. No, it's not Triple D, that's Double D. You have the pocket pivot here, and then it comes back to the 10-day. Well, there's a pocket pivot still in force on the pullback. If you had bought it down at the 10-day, now you get this wonderful, 2.72, just about 3.6% move to the upside. And, and you're making money if you bought it there. So it's kind of the ugly duckling theory, I guess. But it's trying to hold up. But, these are just buy points, technical facts. If they break down, then I guess, that's that. And I think you have to watch your stops on these and not get too piggy. loading up the boat on a pocket pivot because we've seen a number of these fail. You know, I was looking at Gilead. He had a nice gap up here. Even Celgene gapped up here. You know, over the weekend there was positive news for Gilead. And it comes right in. So this clearly becomes a sell the news situation. And this thing almost looking to me like a short, you know, like it's ready to fail. It's going to be a late-stage base failure. And that's really kind of what you're looking at here. And so, you know, to me it looks like potentially a short. And these things could break down. Celgene is looking kind of weak here. It's holding the 10-day on the pullback. That's good. Biogen trying to hold up. It's almost breaking down on the Bible gap up, but it is holding above the low. However, it's now been 5, 10, 13 days on this. Dr. K, what's your take on this, given the fact that it's taken so long to get going after the Bible gap up?
Yeah, I mean, it's always in context with the general market, and the general market's been curling over in subtle ways over the last 2 weeks, and so it's taking this down with it. It's not the most impressive action, regardless. I mean, even in a gently rounding down market, a very strong stock will still move higher. So this one's a bit slow. And you know, if you want to make room in your portfolio for something else, there's nothing wrong with selling this out. On the other hand, your risk level is very low where it sits, because your exit point would be, say, 1 to 2% under the low of the gap up there.
Right. So it's pretty tight in here if you wanted to step in and buy it. But with the general market the way it is, you know, I wouldn't be surprised to see it pull back more. And I think the group is weak. You know, I thought Regeneron Pharmaceuticals might try and come out. You know, it had come out above the 50-day, and now it's broken down. I think ACAD potentially is a short on this rally up into the 50-day moving average. I've been watching this one and thinking it might be positive. You know, on the weekly chart here, you see some supporting weeks, but you still got this break here. So you had the pocket pivot. That failed. That was a couple weeks ago right here. And now this might just start to roll over, and so I'm somewhat skeptical of it now. I actually shorted right here a little bit on the on this rally to the 50-day, so it takes you right around to where, well, it's trading right up there now. The 23 and change, you got right up to the 50-day. You basically kissed it. It was 23.18. The high on the day is, what is the high on the day? The high is 23.20. So you've basically, you know, kissed the 50-day moving average. So I look at that one as potentially shortable. And as one of the weaker biotechs, I think it's probably done if the rest of the group is. Celodex broke down here. Here's another one. It's kind of I thought this might try to come out. You know, you had a couple of pocket pivots that stalled here, but it failed also. Runs through with ACAD, same situation, sort of a tall head and some right shoulders, but the left shoulders is a little bit of a hunchback formation, as I call it, with the left shoulders lower than the right shoulders, but that doesn't mean it can't blow apart. So this thing is blowing apart, and once it broke down through the 50-day moving average, could have been shorted. They announced a secondary. But I'm seeing some of these pan out this way. So someone's saying home builders. If you guys recall, a couple, 3 weeks ago, you know, I was shorting the crap out of Trulia, and up in here, and talking about how I thought the group was weak, and you're going to start to see the related groups start to break down too. You've seen lumber liquidators break down. That guy Whitney Tilson, who was shorting Netflix all the way up and then covered at the top, announced, I think a few days ago here, a couple weeks ago actually, that he was shorting the stock. We've seen RH, Restoration Hardware. So now you're seeing the secondary groups. I think I also talked about the mortgage stocks, the mortgage servicers, and here you have Ocwen breaks down off the peak here, bounces off the 50-day. So you're watching this now to see if it rolls over. Nation Star, same situation here. You know, here's a left shoulder, big head, and the breakdown here. Now you're forming the big right shoulder, and it might be part of this bigger formation. Okay, and I think this is probably a short too. I can't borrow the stock, so I haven't gone after it, but I think OCN, I'm watching this bounce off of the 50-day. I think it could roll over. You might look at watch a 620 chart on this to see what happens. But this one I've been able to borrow, and I think the group, you know, here's your head and shoulders, kind of a pinhead and shoulders here. So here's your left shoulder, your pinhead. You rally back up, just about to the peak of the left shoulder here, and now you're trying to breakdown through the 50. If you did that, then I think it would be clearly shortable. So let's see, more questions. But let's see that this person also brings up the other builders. Yes, there's another head and shoulders type maneuver there. U.S. Gypsum looking a little bit like it's in this big, ugly, rolling top kind of base. Maybe it's ready to blow apart. I've noticed, what's another one? EXP. Similar, it started to break down. So, and it's kind of a rolling top. Maybe this turns into a late-stage failed base, which is what it's starting to look like. You kind of had it fail here on the breakdown and then rallies up to the 10 and 20-day lines and then boom, rolls over. I shorted this on Monday, so that was up in here. But I wouldn't. This is a cover down here. I think if it could rally back to the 50-day. But in most cases, shorting, if they come down 8, 9, 10% in this environment, given the choppiness of it, I'm definitely taking at least partial profits. Let's see, what other questions? I like the new filter you added to HGSI. Yeah, there is a new chart for you, those of you who are HGS investor software users. You guys have seen the chart before, but they put it together as Gil's secret weapon. It's listed as, and it is the chart that this thing suddenly is slow. Not good promotional behavior here with the software sitting there giving me the little swirling. There we go. This is my secret weapon bar chart. You might notice something. Come on now. Let's see. Okay, here we go. NASDAQ Composite. This is a. Whoa! What just happened? This looks like a. No, it's not showing up here. Well, it's not updated to today. So what I'm missing is things are starting to turn red on the chart. But anyways, that's the template that they put out. Kiwi. Kiwi's up today. So we had a pocket pivot, looks like yesterday, but it's a thin stock. So if you buy it here and the market goes lower, guess what? You're going for a ride. Tesla. I think Tesla's interesting mainly because it's up 270 right now. It's holding along the 20-day. You have this big bottom fishing type pocket pivot. The only problem with it, in my view, is that you're coming out of a downtrend. I mean, how do you look at this one, Dr. K? Is that a constructive move right there?
Not. It depends on what time frame. I don't like the stock in general because it's had the gap down on earnings. I want to see it round out its base some more, get above the 50-day. But of course, last 2 weeks it's tight. But the overall pattern to me isn't ready yet.
No, I mean, it looks like it might try to rally. If it can hang in here tight, maybe it'll get going. My theory is that you might see LinkedIn, let's say if it can hold the 50-day moving average and go hang out here, the market pulls back. Even Facebook, if it, well, yesterday was holding the 50-day, and if it continued to do that, maybe if they get the market turned after something from the Fed that indicates there isn't going to be any tapering next week, maybe you see these big NASDAQ stocks like Facebook, like LinkedIn, like Tesla, like Netflix, maybe they lead a rally. And I'd have to say that if I was going to try and play a fast and furious rally into year-end, I would probably go with some of these big liquid stocks. But my view is, and I've traded Tesla a couple of times, if it comes down to the 20-day, buy it and see if it bounces, and it has so far. But, it's kind of in flux. Talked about ACAT already, ROC. This is a chemical stock, I believe. And now, not one that we would buy, so it looks to me like it's breaking down. So I wouldn't even be in the stock. I don't really see why this would come up. It's not one we've talked about, and we didn't consider any of those buyable gap ups. Solar City. Notice how it's holding tight along the 50-day moving average on the pullback. It's actually up on the day. So kind of interesting. Maybe that means it's going to turn and try to break out of here if the market runs up. The weekly base is pretty choppy, so it's kind of in flux right now, I think. But I'd say keep an eye on it. It might, there might be something that materializes along here. It is on my long watch list, so I'm not going to short this thing. ATHN was weak last night. After I was just trying to dig in at the 50-day. Any comments on this kind of action? Yeah, stock sucks. So what you might put lipstick on a pig. It's down on huge volume. It's trying to dig in at the 50-day. Not really. It's actually at the 65-day exponential right now. So I don't know. I don't care much for it. Yandex. Yandex had a big volume break, rallying back up through the 50-day. Shows you the volatility in some names around here. In some of these hot stocks. I know what was the other one? YY. Breaking down, it's back up. I noticed Yelp also kind of flopping around. Let's see. Under what conditions would your ugly duckling theory kick back into play? Under what condition? Well, I'd want to see things getting to points where the market might be ready to bounce, but it looks to me like you're just getting going. So things got to get a lot uglier. And the fact is, you've had very bullish sentiment with 14.3% bears in the Investors Intelligence Investment Advisors Survey, which is the lowest number of bears or percentage of bears since 1987, right at the top. So Taser is coming back to the 50-day moving average on a retest. Maybe it holds. It really is going to depend on the general market. So I think you just kind of have to watch and see how this, that would be sort of like an ugly duckling buy point for a stock. But my concern is that you QE this, QE that, the market may just do something else and surprise everybody. Maybe they don't announce any tapering next week and the market tanks. The dollar collapses and then the market tanks because of that. I mean, there's any number of dynamics in terms of news that could drive the market this way or that. My view is just watch what the stocks are doing, and that's basically how we operate. So, on Taser, yeah, would I buy it here? Maybe, but I'm going to have to see the market turn. So if I see the market turn and I see stocks that I like, pulling into areas that might offer some support, I'll move on those, and then the ugly duckling theory kicks in. But I don't know. I think right now you got to be careful. And we'll see how today closes. Align Technology, not kind of a pocket pivot here, but it's still just trying to work its way through and holding the 50-day. My view is if it can't hold this low here, then that's probably say this low. That might be it for the stock. It is bothersome that post and pre-market action is not reflected on certain charts. Any comments on that? Well, my view is, whatever happens after hours is whatever happens after hours. I don't really try to add it too much into my interpretation of what's going on because I think it's only relative in certain cases with very liquid stocks. So, you got anything to say on that, Dr. K? We got about 11, 12 minutes left here.
Yeah, now this, generally speaking, there's a lot of erratic activity after hours, but sometimes you can get a beat on something that warrants a buy or a sell after hours. And in terms of ETFs in the market direction model, you can certainly buy them after hours without moving the price around very much at all.
Somebody says PII. Polaris, it tried to break out, and now it's kind of flopping around. So I think all of these, you're seeing a lot of stocks doing this. The question is whether this weakness here pans out into further breakage. And I think if you own these stocks, you better decide what your stop is and operate on that basis. So somebody says, if you can't borrow a stock, why not use options to create a synthetic short? I don't really use options. I used to, and I've had experiences where the volatility premiums come and go, and you can be dead right on a stock, but you don't make much money on the option. So CBI, here's a pocket pivot, and now it's failing. It's back to the 50-day moving average. So what is there to say here other than the fact that if I had bought this pocket pivot, I'd have been gone on the break of the low of the intraday low of the pocket pivot day 4 days ago. I just would have been gone because it's telling you it's not working. And in this environment, we're seeing that happen quite a bit, actually, and I think that's not constructive. So LKQ. I've been watching the LKQ. Had a pocket pivot here the other day, but again, here's a stock pocket pivot, broke out, now it's yanked back in, and now you're kind of like in flux. You know, and my view is I'd rather not be long anything because you're seeing most stocks do this. They look strong one day and then they just flop right back in. Netflix pocket pivot yesterday. No, I don't see that as a pocket pivot. It kind of stalled. It's just kind of floppy and choppy and not really going anywhere. It's trapped in an uptrend channel, and there's been no real major buy signals. I guess this would qualify as a minor pocket pivot, but I'm not buying it in this environment. Silica short.
Close about flat, too, in the lower half of the swing.
So Silica short. No, I'm not going to short that one. It's not really. It's just barely kissing below the 50-day moving average. It could rally back up, so not really on my short sale list. What's TBF? Is that the whoops? What is TBF? No, TBF. Bill? God, my fingers are spastic today. Let's see here. What is that? What is TBF, Dr. K?
The ETF, it's inverse of the long bond.
Oh, short the bonds?
Barclays 20-year.
Am I going to short bonds? You're going to short bonds, Dr. K? Yeah, if the Fed tapers, then I'm going to short bonds again. I don't know. You're betting on what the Fed's going to do. If you think the Fed's going to taper and it's going to crank bonds to the downside, then I guess you would buy that.
Yeah, it's like TBT or TLT.
Right. NXPI, selling shareholders announces secondary. You had a pocket pivot here. It runs up and it pulls back. Story of the market right now. So, you know, do you buy it here? I'd like to see the secondary get completed. I don't know if they already did that. Did they already finish that one up, Dr. K?
I'm not sure. It looks like they might have had it. Yeah, if they had it 2 days ago.
All right.
And it looks like they did. That was a lot of volume. So, yeah, it looks like it's done.
So, the stock continues lower after that. Not really what you want to see in my view. I don't know. FNGN Financial Engines. We always get a question about that one. Broke out, pulling back to the 20-day. You know, that's about it. If you're long the stock from the breakouts down here, this pocket pivot here, then you're still okay. It's hanging in there. MU and MYL sell. I don't know. MU is hanging up there, so I really couldn't tell you whether it's a sell or not. Myland. Breakout here, runs up, and now it's pulling back. So I don't know. You know, it's a sell. What are you using for your stop? You know, that question supposes that we know what the stock is going to do from here, and there's no way to know that. So when you ask us that, it's kind of a useless question because the bottom line is, what are you using for your stop on the stock? What is your objectives for the trade? You know, as I've talked about repeatedly, when I go long something and it runs up for me, you know, 10, 15%, I'm thinking about selling it. If it goes up 20 or 30%, I'm definitely selling it, and then hanging back and waiting for the thing to set up again. And so, you know, I don't know what you think is going on here, but you got some heavy volume off the peak. Does that mean it's just some normal selling and it's going to hold the top of the base and then turn around and go higher? Nobody knows. Dexcom. This is a really thin stock. I don't know. I'm not really something I'm looking at. So what do you want me to tell you about it? You know, it's trying to break out, I guess, out of this little range. It's up on the day. You know, that's it. You know, I don't know what I'm supposed to tell you. Maybe like sell your house, sell your wife and kids, put all your money into the stock. It's going higher. I don't know. Other than that, you know, stock's holding up. There's nothing really to say. Come on, give us a question about something that's doing something interesting. UA, it runs up, it's pulling back. You know, if the market gets weak, it's going to break down. So where it's going from here, who knows? But like I said, I'm not going to be long anything just yet. INSY, is that right?
INC one?
Another one, you know, another one trying to break out, and it's pulling back in. What's that, Dr. K?
Probably meant INCY.
Maybe. But, I mean, these are just stocks and patterns. You know, INCY had a pocket pivot here. We discussed that yesterday morning before the open. It's moving a little higher. So in this environment, expect it to pull back, you know, if the market continues to pull back. How does X1 look on HGSI? It doesn't look that good, to tell you the truth. I've looked at it. Started to try to get moving yesterday, reversed and closed down. It's up a little bit today. I'm not, I'm not enamored with it. I'm not enamored with the long side right now. I'm waiting. Things have to get a little bit uglier for me to want to get excited about the long side, strangely enough. ACT, I don't like that action. Dr. K, any comments on that? This is a stock we've been following for a while, Actavis.
Yeah, I mean, it never really gets going. I mean, it's a pretty slow progression, as you can see. It's pretty compressed, and it does obey the 50-day, and there's nothing wrong with playing a slower name. So if you're going to use, say, the 7-week rule on this, you'd still be in the position. And if you bought it early this year, you'd be up actually pretty well. I mean, especially in a year like this year, where it's hard to sit with a position for more than a short amount of time. This is one of the few that continues higher.
Yeah, but that's pretty ugly action. It looked like it was going higher yesterday in reverse. So
yeah,
I don't like it. Sarepta Pharmaceuticals or Therapeutics, what about it? You had a big gap down, you're rallying up into here. Shorted here, I can't really tell you. I'm assuming that's what you're asking about, because you sure as hell better not be asking whether you go long this one. Maybe it's a short in here. I don't know. But it's a $19 stock. Was it really that big of a leader? Had a huge move up. I don't know.
It's super thin now as well.
I still think, I'm still watching Facebook here on this gap up. If the market turns lower and it fails, that could be a nice short spot. The other thing is you're right up against, if this is a left shoulder and here's a head, you're right up against the peak here at 51.60. And that's about where I've got my stop on this thing if it continues higher, which it could, But I think if it reverses today, I'm willing to take a shot here and roll it over. I want liquid, thick stocks. I mean, I can one-click 10,000 shares on this, and it doesn't move more than a penny, if that. And sometimes it just sits there. So I love something like that to come after. If it breaks down, it doesn't have to. So. Somebody said you usually don't like to play earnings roulette. What did you see that made you want to hold Lulu short into earnings? Well, it's not like I went hog wild, with a 100% position. That's still way too much risk, I think, on an earnings roulette day. But yeah, it was a decent position. It wasn't 10%. That's for wimps, but it was decent. And
it also gapped down actually in the last 3 reporting periods.
Right, and so
the pattern was very erratic. It was trading on the 50-day, so you had a really nice setup to go in with a small position and see what happens.
Yeah, and the other thing that kind of was the kicker for me is the relative strength has been making lower lows in the pattern. And that's one thing, that and the black cross, it tells me the odds are generally on my side if I do that. But again, if I take a 30% position, the stock rallies 10%, what am I going to lose? 3%. That's a lot of times for me just an intraday wiggle, so it doesn't really faze me. And it worked out. Now I covered it, and not going to be a pig here. But again, as I was saying, in that first book we wrote on shorting, I wrote with Bill O'Neill. I wrote it, actually, and I took some things out of the pamphlet that he wrote in 1976, I think it was. But, you look at it on a weekly, and you think, oh, look, this was a continuous break. You could have gotten short up here at the 50-day, and boom, there it goes. And I think IBD will annotate charts that way, like, oh, the stock breaks down through 50-day. But that's not how they get started. Most of these breaks that break down from a head and shoulders and go through the neckline occur on gap moves, and most of them, believe it or not, occur after earnings. So, if you're going to think you're going to be smart and shorting it up here, you're probably going to have to play a little earnings roulette to do it. So I kind of stacked up all the evidence and decided, all right, what the hell, let's go for it. I'm up my peak for the year right now, and what the hell? What if I lose 3-5%? Who cares? Just less for the tax man, right? Let's see, UNG. I think this is natural gas.
Yeah.
Yeah, I don't know. This is anything we know about it. We don't know anything about this, rather, and it's just natural gas. Price is going up. Nice trend. If you bought, down here, if you bought a pocket pivot on this, I guess it could have worked. But again, it's a single commodity ETF, and we've noticed you can use those things in SLV, GLD, probably USO too. It might work. Here comes the market now. It's a beautiful thing to watch. But anyways. Somebody's talking about an option thing. Let's see. A synthetic short is long ATM put and short ATM call. So at the market call, that's what ATM means. So volatility is canceled out. I gotcha. But does it mean you make? Does it mean that you're position to make a lot of money in that case. My view is if you don't know what to do with the stock, then playing the options I guess can give you leverage, but I don't really get into it. So if you do, then you could take some of our ideas on the short side and work them that way. Kihu short. I was looking at this yesterday. It's possible. You're way up there. You got this weird little pinhead and shoulders type of thing setting up. It's possible. I'd keep an eye on it. But so far, I'm not really getting anything major here. You're underneath the 50. You've been under it for a while. Maybe another rally to 84. But guess what? It's not borrowable, for me at least. And it's not marginable. And I don't really want to mess with anything on the short side I can't margin. That's what made Twitter such a pain in the ass, is because you can't come in there with a 200% position right at 45 and think you're going to jack it, because if you do that, now you have a big margin call equal to the equity value of your account, because it's not marginable. You got to check that too. Make sure stocks you trade are marginable. Let's see. Yandex volume up 400% on convertible bond issue today. Is that right, or was it yesterday? Today. Maybe it's a short, but again, this is a non-marginable Chinese stock that I can't short myself because of that. Let's see. The last few questions. We got to wrap it up here. Baidu. Nice breakout, pulling back to the 10-day. Don't know what to say about it, but if you were making nice money on that a couple days ago, you're not anymore. Welcome to the December 2013 market. Let's see. Nuance Communications. Somebody really asking about that. I wouldn't short it. It's just a piece of garbage. I certainly wouldn't be buying it. Let's see. SPLK. Splunk pulling back. You had a Bible gap, but that's kind of failed, I think. And I think it's kind of suspect. No real follow-through, no juice to the upside on that. Kind of cheesy, if you ask me. And on that basis, I don't really like it. I did buy it here. I thought, it should hold the 10-day, and I traded out of it the next couple days while it was up. And that was that. But that's basically it. Last couple of questions. Oh, okay. Someone says the options trader is saying, I mentioned the option thing not for leverage, but as an option for when the stock is not borrowable. I'm just wondering if there's some problem I'm not aware of. Seems no borrow shouldn't be a problem. Yeah, so that's good. I mean, if it works for you. So I just don't need to do it. There's things I can borrow out there that are very borrowable, and I can go after them. Let's see. Baidu is borrowable, though, however. Workday, shortable here at the 10-day moving average. Workday's holding up. I'd rather short it up near the peak again. Go long at the lows, go short it up at 82 if it gets there, but it's not, so it's kind of doggy right now. I don't really care much for it either way, so not really playing with it. SD is what? Sandridge Energy. I don't see what the deal is here. This is an ugly pattern. It's just in the downtrend, so there's nothing to do here. I don't even know why anyone would own this stock in this position, but I also wouldn't short it if that's what you're asking about. I mean, it's at the 200-day. I see that, but energy stocks, was it a huge leader? Not really. It hasn't had. This is a weekly chart. You haven't had a big move to the upside. Last question, and one of our favorite stocks, Organovo. I think it's garbage now. I would avoid it. And in a weak market, stuff like this is going to get pounded. So you don't want to be coming after this here. It had its run. Cinderella doesn't come twice. I know she has an extra shoe on the second go-around, but she doesn't come twice, and she definitely doesn't come 3 times. So you tried to rally here as well. You had a little pocket pivot type action here, but it missed by a day, I believe. Wait a minute. Did that actually hit? 1, 2, 3, 4, 5.
No, I think it missed.
Maybe this was the pocket pivot here. Was that enough volume? No, it missed there too.
Yeah.
So the way I look at it,
Cinderella pattern anyway, even if it was.
Yeah, I mean, Cinderella came once on this, ran up to close to 14. We put a sellout on it. I got to say, Dr. K, that was a freaking brilliant call on your part. It was your call too, not mine. But a very good call on that. I think that's the only sell recommendation we've ever put out, and you were dead on that one. So I'm going to
have silver in 2011.
That one too, yeah. And I'm going to have two martinis in your honor on that one today. Anyways, let's see. There's always a certain self-interest there, right? Anyways, so your Cinderella comes twice, but by the first party, the first ball, she's kind of wowed everybody. The second time around, everybody's like, yeah, her again, and now she's coming down. So I don't think Cinderella comes a third time, at least not now. I think at best this thing probably needs to build a base, so I'm not playing with it. Somebody says, Gil, play us Elvis Blue Christmas or Grandma Got Ran Over by a Reindeer on your guitar next week. You guys really want me to do this, so let me see if I have anything. I love Windows. You know, the thing I love about Windows is when you bring up a program, it takes, you know, half the day to come up. Actually, our trader, don't laugh at my music collection. It's coming off of, no, go away. Let's see. I actually like Vince Guaraldi, so we could have Dr. K play this for us next time around. So
Yeah, we can do a jam session. Get you on the Strat.
yeah, I can do the Steve Vai version on that with the electric guitar. I'll play that one for you guys next week. But anyways, with Dr. K,
Good sign off of the music.
on the piano, we'd like to thank you guys for showing up today. We'll catch you next time. So be careful. Things don't look right out there. Later.
So long, everyone.